Hello and welcome to the first in a series of videos I'll put out over the coming weeks and months to try and show you how to maximize the value of the alerts I send out and also help you to really start thinking like a trader. So what do I mean by that? Well, as you've seen, the majority of my trades, probably 75% of them, are iron condors. So let's just start with that as one of my possible alerts. Remember, with a $2 white iron condor, we want 33 to 50 cents per dollar, so this has to be at least 66 cents for me to make this trade, and it qualifies at 67. So if I were to send out this alert to you, you can make 67 bucks and there's a 48% chance of being profitable on this trade. And what does that mean? Well, it means you're risking $133 with a chance to make $67. Max profit, max loss potential with, again, a 48% POP. But maybe say, hey Cal, I'd actually like to take a little bit more risk. How can I do that with what you've sent? And this is a perfectly good trade. I do these trades all the time. But what I want you to start doing is thinking like a trader, and maybe on this particular day you feel like taking a little bit more risk. How can you do that? Well, one way you can do it is by bringing the strikes in. So watch here, 48% POP, 67-cent credit. If I bring the strikes in, you see my POP, my probability of profit, goes down, but my credit goes up. So let's go one more time and turn this into roughly a chicken iron condor. So what happens? Well, now I have the chance to make $94 max profit, and I'm only risking $106. So it might look like I'm taking less risk to make more money, but that's not true because my POP has dropped by 10%. So even though I can make more money up here, there's a much higher chance that I don't make money, right? I'm only a 30% chance of making money, a 62% chance I lose money on this trade. So again, I can make a lot more money, but there's less chance of me making more money. So I've actually turned this trade into a riskier trade because, at least in this case, I might want to potentially make more money on this trade. So that's one way you can adjust my iron condor trades when you see them. You can adjust them out and in to a number or risk tolerance level that you're happy with. The other thing you can do is, if we turn this back into the original iron condor, you can see the strike prices are 246 for the put and 260 for the call. So let's say I was comfortable with doing naked options and turn this into a strangle instead. So let's use the same two strikes, 246 and 260. So we'll go up here, we'll grab those, and we'll bring it in until we get to 246 and 260. Same strike prices. So what happened on this one? We took the same strikes I had on the iron condor, and now I'm collecting almost 4 times as much money. My POP has gone up from 48 to 59, which is awesome. And what's the trade-off for doing naked option trades? It's right here, undefined risk. If things go horribly wrong, I could lose a ton of money on this trade. But I have a higher chance of making more money if I do this trade. But once again, you have to know what you're doing when it comes to undefined risk trades. And just as I did with iron condors, you can do the same thing with strangles. Right now I'm using the same strikes, but I can push the strikes out a lot further if I want to. Let's go way out here. Let's say I got a roughly 75% chance now of making money. So what does that do? Well, my potential income is less, but I've taken this all the way up now from 59 to 74, and maybe that makes you feel more comfortable when you put a strangle on. Once again, it's all about adjusting the trades to your risk tolerance. That's what I want to try and teach you over the coming weeks and months. I'll send out these little miniature videos on how to adjust certain alerts into certain kinds of trades. So in the case of iron condors, you can absolutely make the trade I send you, or you can adjust it in and out to a risk tolerance you're happy with. Or if you're looking to take more risk, you can turn the iron condors into strangles, and once again you can adjust those strikes in and out to a risk tolerance you're happy with. And that is part 1 of starting to think like a trader.